The US dollar is broadly bid in this somber Wednesday trade as we remember the horrific tragedy of this day back in 2001. Euro weakness stands out on the day as the single currency gives back a nice amount of its recent recovery from multi-month lows against the buck. German growth downgrades were a major driver behind the euro struggles, which ended up having a weighing influence on currencies across the board against the US dollar. All of this comes ahead of an anticipated Thursday European Central Bank decision where the market will be looking to see which way the central bank leans. Interestingly enough, into the lead up, most of what we've been seeing and hearing is the ECB shying away from any aggressive talk to the accommodative side, something that should be more supportive of the euro. And so we wouldn't read too much into the latest round of selling and believe we could just as easily snap back the other way with the euro getting back on track with the recovery. German media has reported most members of the shadow ECB Council are opposed to further monetary policy easing, something that further supports our view that the Wednesday setbacks should be taken with a grain of salt. Meanwhile, President Trump has been back on the wires expressing his displeasure with Fed policy, urging the Fed to lower rates down to 0 or less. And yet the president is going to have a tougher time convincing the Fed if inflation metrics are pushing up, as evidenced by today's hotter than expected U.S. producer prices, something that has further contributed to U.S. dollar demand. On the equity side, things have been quiet, with stocks more comfortable in a state of consolidation off record highs. We continue to warn against any expectation for meaningful upside at this point, with a greater risk for a well overdue capitulation over a decade after the financial markets crisis of 2008. That's all for now.